All right, there we go. Hello, hello, John S. Rhodes of the Rhodes Brothers, and this is Greater Wealth Through Mastery. The topic of today's short talk is the 5 most asked questions of Michael Saylor of Microstrategy. So what happens is that Michael Saylor gets asked some of the same questions over and over and over about Bitcoin, about MicroStrategy, and related. So what I'm going to do is spend just a little time walking through the 5 most asked questions and give you the summarized answers that Michael Saylor has provided. So these are not his words. These are a summarization and sort of an aggregation and filtering of the questions and the answers. So the very first question that seems to come up over and over again is, why did MicroStrategy choose to invest so heavily in Bitcoin? So why Bitcoin for MicroStrategy? Well, Saylor has consistently stated that Bitcoin represents the most secure and reliable store of value in an inflationary world. You know, fiat going to zero, the dev of cash, of dollars, of money all around the world, all fiat by dictate, right? So just out of thin air, money printer go brr kind of money, right? Paper money, not gold. By the way, Bitcoin better than gold. More on that in a short while. So inflation, prices keep going up and up and up, but so does Bitcoin, especially over 4+ year cycles, by the way. All right, so he continues. He describes Bitcoin as digital gold. I've actually heard him say that many times, but it's better. He'll tell you that Bitcoin is certainly better than digital gold. It's far superior to traditional assets such as cash or bonds, and he views those as losing value due to inflation, and I agree with that. His decision to move MicroStrategy reserves into Bitcoin was rooted in this belief that Bitcoin offers long-term value protection. So really, more than anything else, Michael Saylor talks about Bitcoin storing and really being energy and storing it across space and time digitally, better than any other kind of money and really any kind of asset. He uses the example of real estate sometimes, and he's like, well, I can't move the Empire State Building. That property isn't going anywhere, certainly. And let's say it's worth, I don't know, $100 billion. Who knows? Even if it's worth $100 billion, he can't take that to London. You can't take the Empire State Building, lift it, and then just drop it in London. It would take time and energy and money, and it would be ridiculous. But you could move $100 billion of Bitcoin in a click. And in a matter of minutes, that value would move. So if you think the Empire State Building is valuable, I do. I don't know how valuable, but let's say $100 billion for fun. Well, I can't just click a button and move that value from point A to point B. And I certainly can't do it in the matter of, half an hour or so or less. Okay, second question. How does MicroStrategy benefit from holding Bitcoin over using Bitcoin ETFs? In other words, holding Bitcoin in different ways. Why actually hold the Bitcoin? Saylor emphasizes that MicroStrategy has operational flexibility. As an operating company, MicroStrategy can issue convertible debt and other financial instruments, providing options to leverage Bitcoin's volatility for greater returns. Now, that's a lot to unpack, but basically it comes down to when you own something, you have a lot more flexibility on exactly how it is used. So MicroStrategy's shareholders can benefit from both the company's operational revenue and also Bitcoin's holdings. So the cash comes into the company. Instead of going into cash reserves, the cash profits are converted from cash profits US dollars. They get converted into Bitcoin. And he argues that that creates a superior value. It actually holds value. And in theory, it creates more value over time. As Bitcoin's price goes up, it benefits shareholders and everyone wins. Okay, third out of 5 questions. What are the risks of holding so much Bitcoin on the balance sheet? So Saylor acknowledges the volatility in Bitcoin's price. There's certainly volatility, but he argues that the long-term appreciation of Bitcoin outweighs short-term risk. Basically, if you hold Bitcoin for more than 4 years, you're going to get fantastic returns based on previous history. This is not investing advice. This is just me interpreting what I've seen and what I've heard. But basically, if you hold more than 4 years, you're going to have some very serious appreciation. All right, continuing. He believes that companies not adapting to a Bitcoin strategy face greater risk from inflation eroding the value of traditional currencies and other assets they might be holding on their balance sheet. He also stresses that the volatility of Bitcoin presents opportunities for sophisticated investors. And what that comes down to is if the price of Bitcoin really, really drops, you can buy a lot of it, right? So you can get an unfair advantage when the price of Bitcoin drops. Again, assuming that you're an ongoing buyer, which MicroStrategy is. On the other hand, volatility gives you the radical and wild swings upward, especially over time. So rather than kind of going like this, right, kind of moving up over time, Bitcoin does like this, but you notice, oh, it's off the charts. That's what Bitcoin does. So you accept far greater gains right along with far greater volatility. What smooths that out, according to Saylor, is time. Buying and holding and making it a reserve. It's a reserve asset, not converting it, not treating Bitcoin like cash and that, hey, it's going to come in and now we have all this Bitcoin and now we're going to spend it. No, it's excess cash. It's the reserve rather than being in bonds, bills, treasuries, or cash. It's in Bitcoin, which is appreciating in value, especially over the long term. All right, question number 4. What is the long-term plan for MicroStrategy's Bitcoin holdings? So Saylor has repeatedly stated that MicroStrategy is committed to holding Bitcoin for the long term. So he's focused not on the short term, the long term, with no intention of selling. He refers to this as basically the Bitcoin HODL strategy, HODL, the Bitcoin HODL strategy, aiming to retain Bitcoin for potentially a century or longer. Whether he does or not is another matter. It's the intention, right? That's the idea. That's the strategy that he is following. He views Bitcoin as an integral part of MicroStrategy's corporate strategy overall and expects it to contribute appreciating in value over time. You're taking advantage of the downward volatility, so you're picking up Bitcoin on the cheap, and you're also benefiting from the upside volatility because you're not selling. So over time, the stash continues to grow. And again, this is really about the reserves, the excess cash, the excess profits that are on the balance sheet. This is a balance sheet play more than anything with MicroStrategy. You see, cash is coming in. Let's say it's $100 million per year of excess profit. Rather than sitting on that or getting low interest or putting it into an asset that does not appreciate very much or even being harmed by inflation, you buy Bitcoin and you just hold for a very, very long time, according to Michael Saylor. Okay, and number 5, the 5th most asked question that I found in my analysis is MicroStrategy's Bitcoin strategy sustainable? Wonderful question, right? So Saylor defends the sustainability of the strategy by pointing out that the company's financial health remains robust. You see, this is not a failing company. It's still profitable enough, very profitable in a lot of ways. And so he can continue to put in Bitcoin and enjoy the price appreciation on the profits. And he can also do cool things with the balance sheet. He can issue stock, he can issue bonds, and then use the proceeds of that financial engineering, which is what it is. He can take the proceeds of the financial engineering activities, balance sheet manipulation, and further enhance the amount of Bitcoin on the balance sheet, which is exactly, let's face it, that's exactly what MicroStrategy investors are interested in. He believes that MicroStrategy's combination of software services and Bitcoin holdings provides a resilient dual approach to creating value. He has emphasized that Bitcoin is a global, decentralized asset, making it less susceptible to government intervention and manipulation. And again, Michael Saylor has a playbook for what he is doing, and he's even published that playbook. If you're interested in learning more about the playbook and what that means, by all means, let me know down in the comments below. One of the things I will also point out is that in the next video that will end up showing up in just a moment, if it hasn't already, is you'll see exactly what strategic thinking combined with tactical actions really can do for you. It's kind of profound. It's a breakthrough that we have discovered. And in that next video, you'll see exactly what I am talking about. Might be a little bit of a stretch, but you'll see what I am talking about. Leave a comment below. Share this with a friend. By all means, subscribe to the channel. The Rhodes Brothers do appreciate you, and we will see you in the next training.